Well, good morning and welcome, everybody. It is Wednesday, August 14th, and this is the AgYield War Room. Um, if you don't know me by now, it's nice to meet you. I am AgYield's marketing manager and everyone's favorite backup host, Jack Coakley, filling in for Dan today yet again. As always, feel free to join the discussion. You can post a comment anywhere you're watching, whether that's Facebook, X, YouTube, and you can always reach us at info@agyield.com. Enough from me. Let's get Ryland to rattle off some overnight numbers.
Yeah, thanks, Jack. We got D's corn overnight down 3/4 cents at 3.96 1/2. No beans were up a nickel at 9.67 1/2, and D's wheat 5.50. That was down 1 3/4. Stock market right now, you got Dow Jones kind of teetering on unchanged right now. S&Ps look to be up right around 6, and the NASDAQ up 230.
Thanks for that, Ryland. Let's go ahead and kick things off here with Dustin. Dustin says some thoughts, what's going on in your head today, and then we will work it around the room.
Thanks, Jack. Yeah, we're obviously getting to be quite low in soybean pricing, and there were rumors yesterday that China was buying more beans off the PNW. Those did not show up in the daily announcements. Sometimes they take a day too, so it's not necessarily that it didn't happen, but usually anything over 100,000 metric tons is either the next day or the following day reported. So we are getting competitive. Our prices have fallen quite a bit, and then this has also happened at a time where the dollar has weakened against the real in the last couple of weeks. So in a sense, it's kind of like us exporting our lower prices onto Brazil, and it makes us more competitive. So wouldn't be surprised to see some more business come in. We're still trying to kind of come back from finding out that there's an extra 1 million acres of beans than what was previously expected, and also reporting a 2% above a record trendline yield beat. So huge break into the single digits here. But low prices are usually what drive best cure for low prices. If we start seeing an uptick in demand, that's what the market will be looking for.
No, that's really good. Justin, anything to add to that?
Yeah, just last night, September soybeans, got all the way down to 940. And if you look at kind of that 2018 through 2020, kind of the last bear string of years, I guess. That was kind of the upper end of the range. It was kind of that 850 to 950 area was where beans kind of sat for 3 years. So we're basically all the way back to that range. Now, do we go to the lower end of that range, which would be not fun? I think that's what, technically, I'm guessing people are starting to look at. We're getting into a value area. Now, it could be $1 lower before you stop or anything like that. But by any measurement, just to kind of add on to what Dustin's saying, is that we're in value areas. We're competitive in the world. I think soybeans are trying to, that's their job, is to not have a burdensome carryout as much as possible. So to get to the government numbers of increasing demand by over 250 million bushels from year over year, you're going to have to be cheap prices and competitive to do that. So I think the soybean market's doing what it's supposed to. Now it's just a matter of, picking a bottom is always a tough job, obviously. And there's been a lot of body bags carried out trying to do that. So not going to try to pick a bottom. It's going down rather easily. And I think maybe it's more of a calendar date than a price point as to when this thing stops. We probably got to get through harvest pressure, and we're probably going to have to overshoot how big the yield is. I think Ben and I were talking yesterday after the close that I think soon you got Pro Farmer Tour next week. I think you're going to have people coming out of the woodworks trying to race to see who can put the biggest yield on paper. So you probably have to get some of that exuberance over bearishness to make a low, in my opinion.
Oh, that's really good stuff. Ben, I can, even from your little tiny screen, I can see that your wheels are turning. You got something to say?
Yeah, I just, I think that, to Justin's point, trying to pick a bottom gets to be, in most cases, a fruitless task. Markets go up and they go down. Typically this time of the year, your rallies will be sold. we have what we have today in the U.S. I guess my concern moves a little bit further out on the horizon. We know that we're heading into first notice day. We've talked about that. We know that we have a large crop outside of something really major changing, right? Asterisk next to that. And we've got to go through this period. But what I would think is logic beyond this is looking over the horizon. And we discussed this yesterday afternoon that, we put more premium in these markets last year for the South American crop than we did this summer in the U.S. crop. And maybe that is, something that we need to be aware of in these fairly heavily supplied market to quickly after harvest try to get our T's crossed and our I's dotted as much as we can to look at forward marketing ideas. I think we mentioned on here before that the high of the year last year was January 1st, right? Which coincided with kind of that peak uncertainty of South America. And I see a lot of narrative about people telling you that it's dry in Brazil right now. It's their dry season. It's supposed to be dry, right? So we have our own things domestically to handle in the next 8 to 12 weeks. But I think coming through that, that given an opportunity like last year, I think it's something that you should be pondering to prepare in advance. So
yeah, and you're just to add to that, you're talking about the potential of seasonality is changing a little bit.
Yep.
Just with more. I mean, a few years ago we crossed that border, right, where South America is producing more corn and beans than us. So certainly beans, and they grow them to export, to your point. So if there's a problem there, it's a bigger issue for a global trade potentially.
Yep.
The other thing I was going to add to beans that's come is that we keep getting more and more negative news in the biofuel sector. We've talked about this on the show, the used cooking oil that we keep bringing in from Asia to compete with soybean oil. And we built all these crush facilities. There was a news article out yesterday, I believe, California talking about after 2028 capping the amount of feedstock that can be from soybean oil and canola oil to only 20% for renewable diesel. So we have all these green policies, but they're really not favored to the American grower. So it's really unfortunate, So like what we have to do to fix this, what we talked about is we have to use more and more of these feedstocks domestically, corn and soybeans, and the policies, are go green for whatever you want to call it, political reasons or environmental, whatever you want to call it, but they're also geared to bring in the cheapest feedstock in the world. And I think there's a lot of bad actors in there, and verifying that used cooking oil is green, I think is impossible from Asia. It's like, oh yeah, they definitely didn't cut down a tree for this used cooking oil. Like we're definitely saving the planet. Let's bring in a bunch of used cooking oil from Asia. So there's some things that really need to be cleaned up. And I think that has also been weighing on the soybean complex.
Definitely. No, that's great insight. Any other grain discussion points before we jump over to Ryland with livestock?
Well, it's not necessarily grain, but we did have inflation data out this morning. It was 2.9% in July. That's the 50th straight month of increases, but it did come in just slightly below expectations. So that kind of bolsters those rate cut odds for September a little bit. So not necessarily a bullish or bearish thing. If anything, though, I think it did push the dollar index slightly lower, and it would be a little bit of a friendly tailwind to commodities.
Yeah. Thanks for that, Dustin. Ryland, what's going on in the meats, and where's your head at this week?
Well, not too much developing just yet in the cattle complex. We had kind of mixed action yesterday. I think it was we had a little bit of a feeder-led gain just because we saw some better trade in the cash markets, steady to about $6 higher in some regions of the OKC auction. So it seems like that really kind of led the charge. I mean, it's been kind of all over the map. It's been on a big drop. I think buyers are kind of jumping in here just with a little bit more confidence, just especially after that, just looking for deals. But it seems like the live market is just kind of languishing right now. It just seems like you've got kind of choppy sideways trade. There's always a lot of caution after these kind of big liquidation kind of breaks. And we're still waiting to see what happens in cash. If cash isn't sharply lower, the board could find quite a bit of support. The discount's going to look a little bit too wide. So I think that's all anybody's really looking to see. If we're going to see steady, maybe even higher cash trade, and if that's the case, the futures are going to look a little bit undervalued at this point. But there's still a lot to know right now. We try to get some of those buyers back, maybe see a retracement of the move. But overall, there's still just a lot of caution right now, just considering the time frame on the calendar we're in. Coming out of, just ahead of the Labor Day holiday, and see if that demand starts to back off, or if the futures are going to trade those numbers. In the hog section, we've seen a little bit of light liquidation from the longs open interest. Looked like it was down about 600 contracts yesterday. So just kind of seems like we're kind of melting down, just slowly eroding here. There just doesn't seem to be a lot of good news right now, even though cash was just slightly higher. Cutout was slightly higher. It seems like it's kind of hanging on by a thread. So we'll see if we can get a little bit of an uptick here in that carcass just to kind of help add some support. But it's at this point, the trend is still kind of down right now, and there just doesn't seem to be a lot of enthusiasm from the buy side of the market.
Thanks for that, Ryland. Any parting shots, guys, before we call it a day? I'll take that as a no. Well, if you enjoy the show as much as we enjoy putting it out into the world, give us a like and subscribe on YouTube. This helps us out with the algorithm immensely. It doesn't cost you a dime, and you get to know every happening that we have on YouTube. You get all the latest updates and access to premium content. Thank you so much, guys, for tuning in today. As always, we're streaming live on X, Facebook Live, and YouTube Live. Thanks again for everyone who tunes in on a daily basis. We hope to see you again tomorrow with Dan. I always have a good time being up here. So, let's hope that Dan has more sick days and plans in the near future.
More Jack.
more Jack.
Need more Jack.
Yeah. Thanks, everyone.